Our final day of this week, which is Friday. As we can see here, yesterday we actually closed higher than the previous month, and that leads to turning this bar green, right? If you've been with us for a while, you know the +4, -4 is what turns some of these bars green or red. And so with the close above the previous month's close, we're looking at some momentum, getting some continuation here above that level. That'll be something that we monitor into today, see if we are going to get continuation in that direction. We're looking for the market to really stay above that 45, 76, 75. Right now, the market's trading at 45.80. Remember, this chart is only based off of the cash sessions. But right now, the market trading at 45.81. So with that being said, should the market not be able to get below that 45, 76, 75, we really have no business being short, and we want to kind of maintain our posture of continuation with this break up. The weekly, as you can see, right, is still getting a little bit of continuation. For the most part, this week is just inside the previous week, so more of a balanced look on the weekly. We have kind of a monthly looking to take us higher, the weekly really just kind of trading sideways. We have to continue to monitor that, and we're looking on the weekly to close out the day today. What would be a strong close would be a close above the 4,675. Above that level, we should see some continuation, and we want to kind of maintain that upward posture. With that being said, if the market is unable to kind of get above that 4,600 and fail, kind of get that reversion to mean look and most likely just trade sideways into the end of the day. Now, we do have some news coming up at 10 o'clock. That's that prelim end of month consumer sentiment, which is a 3-star news report. And with the volatility that came out from the non-farm employment change and then the unemployment rate, we can kind of expect some more volatility heading into that report, right? So during a period or during the first period of the day, we would expect the market to probably hold its breath until that report comes out. And then once that report comes out, the market will probably become a bit directional. Heading over to the daily, you can see just another day in balance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in a row now. That is, a real key, because one thing that we know about balance rules is that the first thing we do when we get a break of balance is that we want to monitor for continuation. And especially when you have such a significant amount of time spent in the balance, that would mean that there's a lot of built up inventory, or people have been able to kind of maintain their positions because of margin required hasn't really succeeded what it would normally if you got a directional move. Right? So had you been filled 10 days ago at this, let's say 45.70, well, for the most part, at 45.70, and we called it 45.68, you'd pretty much been there the entire week. So had you opened that position, you've been up this week, you've been down, or for the past 10 days, 11 days, excuse me, been up a little bit, you've been down a little bit, you've been up a little bit, you've been down a little bit. So there's been no real reason for people to close positions or get forced out of positions due to a margin call. And that's something key to note, right? Because that would mean that there's a lot of liquidity kind of getting built up. Something that I always look forward to on Friday is the COT report, especially when the market trades sideways, because it really gives us an opportunity to kind of see what these market makers are doing, right? This is stale data as of last Tuesday. The Tuesday was the 5th. So the market will only tell us the data from the 5th, and then that Wednesday, Thursday, and then today. We don't get to see what they were doing, but it does give us a little bit of insight if we use our imagination on kind of what they're up to. Now, switching over to the profile, one thing that we'll do here is we'll just go ahead and smash these together. And you can see the big distribution. So this is that balance that we were looking at on the daily, these 11 days in a row. You can see where if this is 50% of the value, we just have it on the 50% because of the outsized range 2 days ago. But you can see with the overnight session, we kind of peaked down in, and these are single prints down here, peaked down in, couldn't fill those single prints, came pretty much right back where we were at. Yesterday's settle was a little bit higher. So we're opening up near this top of balance, and you can see this like rather large distribution that comes in right here. And this is that 75 area that we were talking about. So there's kind of a big ledge and a lot of volume. So key thing would be looking for that market to hold that level, get continuation to the upside, and continue to build value higher. And what is important to kind of note here is when you look at this distribution here on the right, the larger distribution, you can see a bit of volume being captured overhead, right? And so this is something that could tell us, maybe a seller has been moving in at this position and is looking to trade back down to this larger distribution and distribute the prices there, right? It could also tell us that maybe some buyers have been trying to buy up here and they've been getting stuck and forced to liquidate. Now, one thing that we've noticed, one thing that we've noticed here is pretty much for the most part every time during this balance that we get up to this kind of 88 to 93 area, we've been getting liquidations, right? So the market will trade up and then liquidate down. It trades up, built a little bit of value, liquidated down, traded up, liquidated down. And so yesterday, being a more bullish day or more of a continuation day, the market actually moved higher and closed higher. That's one of the only closes besides this outlier close here that's closed away from this large distribution here in the middle. So that's kind of a bullish close, telling you that buyers were aggressive yesterday at keeping the market higher and they would like to continue doing that. Now we're opening a little bit lower than that. So, that really doesn't mean much just because there was a little bit of overnight weakness. We know that typically short time frame traders are trading the overnight session, or weak-handed traders, or what I like to call short money, right? We got short money and long money. Short money being traders that don't hold positions for a long time. They're short time in the market, and long money traders being traders that have enough money to hold a position for a long time, because that's honestly what it takes, right? It's great to understand that, and understand that, just because we as day traders here are just not saying this is a great place to buy or sell doesn't necessarily mean that long money trader is going to be thinking the same thing. They could be looking at it and thinking, well, I'm going to be trading this for an X period of time, and so this is a favorable trade location for me. With that being said, it's looking like we're opening up underneath yesterday's value, but back inside this balance. So it is a very tricky situation today, and I implore you guys to exercise a little bit of caution. One thing that we will do is switch our TPO, because we had a smaller range yesterday, back to our normal 68%. And you'll see we're opening up just below value. And like I said, it's going to be a tricky situation today. Should the market hold this level here, this kind of 80 to 75 area, I'm really going to be looking to take this thing back up towards that settle. And you can see kind of where this upper distribution was at, right? And it's kind of the high of yesterday's distribution. We've got a VPOC from yesterday, and that would kind of give us that opportunity to look higher. And so one thing that will help, I think, today, take these two profiles, push them together, right? If you look at these profiles, yesterday was just an inside day, right? We didn't trade past the low, we didn't trade past the high. It was really just an inside day that moved with overlapping value to higher. So we merge these together, and this gives you a better perspective of value. And so this will be your key. This low here, this 72, right? Like we said, 75 to 80 is kind of the key for the upside. Well, a break below this 72 really kind of unlocks the potential for the downside and the fill or retest of these single prints down here, 64, 61, and then that settle from the previous day, right? That 56. Yesterday's low was that 69 level, and then we had our previous weekly +4 being at that 68, and we've known, or we've kind of seen buyers come in around that level. So even a break below that 72, but failure to get below that 68 and kind of hold will be in kind of an interesting piece. And it's just going to be a very cautious day. It's hard to trade inside of a larger balance like this because the market tends to be choppy. It tends to go fast and then slow and then fast and then slow. So you're going to have to really exercise a little bit of caution. Now, that being said, it is Friday, right? If you've had a positive week, you don't want to be risking it all and kind of ruining your week. If you've had a negative week, you also don't want to be risking it all trying to make up for what you've lost and end up something catastrophic blowing your account and you won't be able to trade next week. Other than that, everyone on YouTube, have a wonderful day. If you have any questions, just comment below the video. Make sure that you're managing risk and sticking to your trade plan. Catch up with you guys in the trade room.